Hello, it's Darren from Investor Income. Welcome to the channel. We'll be talking about Nadex again today and how you can use Nadex to your advantage and make some real money. And in particular today, we're just going to touch on trading it as a beginner and how you can make money consistently using my strategy. So, if you're starting off with Nadex and you're used to the platform, how it works, you're going to need to be careful about your expiry times that you use for trading. Now, if we're trading a short-term position, that's a position that's not going to take hours and hours and hours to come to fruition. I did take some 12-hour contracts actually for the first time the other day, actually in the trading group, and we're just discussing how we can extend the period of those contracts and still make money. But here we're just going to concentrate about, as a beginner, how you can take contracts and make money in the short term rather than holding those for too long. I'm going to be taking that basically using the oscillator at the bottom here, the blue line, but using the green and the red lines. So green above the red is obviously a buy position, and the green below the red is obviously a sell position. Now we can use those. You can see here these relationship to each other. So the green and the red, when they start to converge, it means there's a possibility of a market reversal. So around these sort of levels, so a market reversal was possible, and it did actually roll over further up. It just gives you an indication that things are cooling down. So we're going to use that to our advantage, but we're going to be trading short term. So we'll be trading, within an hour or two, maybe three. Okay. So when your green's above the red, you can see here the price comes below the middle line here, which is actually the zero line. And at that stage, we're going to start getting interested because we're going to be taking, this is effectively using a trend-based system to scalp the market. The benefits with this is you're taking short-term moves, so you can get numerous positions and make money and get a return. We don't take out the money contracts, we only take in the money or at the money contracts. For this strategy, you want to be taking as close to at the money as possible, and you want to trade those with caution. But let's have a look here. So let's just go back. Actually, this is some of the trades I've entered previously. You can see these are longer term trades where the market's oversold and then it reverses back up, but don't worry about that for the time being. We're just going to trade these positions. Let's try and get to it. I think I've traded so much on the US dollar CAD recently that I have arrows absolutely everywhere. Let's just change. Let's go to Aussie dollar. I haven't traded much Aussie dollar. Right, okay, Aussie dollar. So let's just go back in time. So anytime would be okay. We just want some trading time. Let's get off those arrows. Okay, so here you can see we've got a move up. So green's above the red, comes below the 50, so you can enter a position here, take it to the top of the oscillator, so that move there, and sell that. Okay, so you've taken 66. Now, so that's just 10 pip move. That's absolutely fine. Aussie dollar, that's actually quite good for the Aussie dollar. So you can take that position there. You can see this one just touches, wouldn't be taking that one though. Let's have a look here where the market's gone flat at the top. So it's been overbought for a period of time. You can see it comes back, it doesn't actually go below, but it comes back here. So potentially there's an entry around this level to get in. So if we say we take a position there, so the position will be roughly there, that spike. And then the price comes down further and goes oversold further. So we'll take another position down there. And then price actually is telling you here with the convergence of those lines that it's going to possibly reverse. So this move here on this spike, I'll then come out of this position. So that spike, that position will be closed. This spike, I'll take the profit as soon as it hits that entry point. So that one will be no gain, and this one will be a profit, and I'm out. Okay, that's just scalping the market. This is telling me the green is coming to the red. That's telling me price is possibly reversing. And you can see what happens here. We're in overbought territory in any case. Okay, so the oscillator's come down to the bottom. Now, this spike up here, so we're expecting price to continue lower, and this is why I want to show this kind of situation. So we're still in overbought territory. Okay, the green is crossing the red line, so we're expecting some downside movement. Okay, but as you see, price remains overbought for some period, but that's absolutely fine. Okay, we're going to trade the same system, so price spikes up, so we're going to take a position there. There, we'll take it around there probably. And then the price goes up further and spikes again. That's fine. We'll take another position up there. And then it continues up. It comes down for a time, doesn't hit my original entry. It goes up further, so I'm going to take another position. Okay, now the reason for that is we're overbought in any case. It's already spiked up several times beyond that level. And you look here, you go, why would you take that? How do you know it's going to come down? Because price will revert. Very rarely does price just continue up and doesn't consolidate back to the original overbought area. So here you can see that's come down. These two are winning trades, and that's no gain or a tiny loss maybe. By the time you come out, that's fine. Absolutely fine. That's a winning position again. Okay, but you will need to take re-entries. Nobody can predict the absolute peak of a market. Up there again, you take a position here, because obviously green's below the red, spikes, you just take a position and come out again on the oscillator here. So that's another win on that trade there. So here, I hope it's easier with these, maybe it's easier with these. I'm not even looking at the time, we're in the early hours of the morning here. So here it spikes up, so we take, what's going to happen with this one. It's a sell position again. Sell position again. This spikes up, probably into 1-2 trades there in reality. And we would have another nice winning situation, as you can see. So it comes down to the first level, close out the second trade, close out the third trade, take the first one out. Okay, that's another winner. So, market comes down again, and the price spikes above. So we get into two positions, one position here when it goes above the 0 line, and another position there. Trades down, goes through my first position. Because these are so close here, I might have only just taken one actually, if we're fair on that one, because the price has moved a little bit, but it's only moved a few pips. So in fairness, I wouldn't enter a second position. I'd just have that first position on. But if we did have two, it would come down, but I'd want more than 3 pips on that second position. So I'd hold that longer and do it on the oscillator down here to when it comes out. And we get a lot better win. Now, I'd only the first contract, if there's decent gap in price between the first and the second contract, I'll enter then maybe another contract after that, because we're going to get some movement in the price and you're actually going to make some money. If the market goes flat, completely flat, in this sort of situation, okay, you only got one position on in any case, so it doesn't really matter. It's just when you decide to cut that contract then. So you can see price has gone oversold now. The green's below the red. We've got this big gap forming because basically this shorter term oscillator is accelerating away from the other one. So that's showing that the market's getting stretched. So that's why you get some consolidation and the price move back again. Basically, if it goes too far one way, it will come back to that level so they can reunite. And there's a reason for that. It's just overextending on that move. Now you can get periods where you get a long run, but you'll get this situation where the price will remain in overbought conditions for a long time. These averages very close to each other. So in strong markets, we just need to trade more carefully. Can't get this off for some reason. Right, so here we go. We're bearish here, but I'm not going to take these trades for that reason, because we're in oversold territory. Okay, oversold territory on the green, and there's this big gap between these two lines. Okay, so I'm only getting interested after a while up here, after we've had some consolidation back. So this move here, I'll take a trade up there. I'll take a trade up here, and we'll see what happens. Lovely. Okay, don't be afraid of the price moving up. That is excellent news. Okay, so we're going to take one up there. And lovely, we'll come out down the bottom there. Okay, so the oscillator's gone oversold. We're more or less down to our first position. Okay, second position's got a lovely profit in any case. So we'll close the first position out for a slight loss. Second position, I can't speak, position is a nice win. And that's that trade over. Now, you can see what's happened with the oscillators. They've gone completely flat in the middle, so I'm not doing anything at the minute. Would I take one there? No, I wouldn't. So we've had a move now. So we're just going to take, I'm just going to move these across. Take a little scalp on this one. There we go. So we've got a spike down the bottom there. I've come out on that spike probably. Just because price hasn't been doing much. I've entered. It's just gone sideways. Don't like that. It's in the middle. Very weak anyway. So I'll just come out and make a little bit of money. Okay, you're getting a little bit of movement there. This is Aussie dollar, US dollar. It's a weak pair. So we trade that one as well. We've got a spike back here. Now this one's come back. See, it's gone down, down, down. Sort of bouncing around this level, and it's come back and hit this level again. So let's take a risky one. That is a risky trade. I'll come out down the bottom there, so that's another win on that one. That was risky because every time you test a level, everyone trades levels. Okay, you can see this. It's bouncing off all the way across. Okay, so people trade levels, so you've got to be careful because the banks will spike those levels and take people out. So we just trade that short move there. Okay, and it's coming back again, I'd imagine. Just doing nothing. So this is completely doing nothing. Okay, this market, you can trade the oscillations in this range we've got here, but it's not. I don't find it. It's too flat. There's not enough volatility in it. And here we go. So it's come back to that level again. This would be a risky one. I'll take this, but I would not be optimistic. Let's take it. Okay, great. It's coming, and we'll come out again at the bottom here. Now, you can see you don't have to be a genius to realize there's a line here where people are entering trades. So we trade with more and more caution. It's going within this range. It will break out at some stage. They're just range trading, and it's broken. So we're not going to take that one. And you can see the oscillators are showing you something's up in China anyway. So it comes back. I'm actually going to take that one. I'm going to take that pullback there because I expect it to go higher. Now that's just purely from it coming down. It's broken that level there. It's come back down to retest, but it's a weak move, so I expect it to go higher. Probably be wrong now and lose, but never mind. Oh dear. Okay, there we go. Bang, it's gone up. That's it. That is me done. And that is some winning trades for you. Very nice. This is how you can scalp the market and make money. It is my system I trade for a living. If you want to join our group, please email me in the email below. Hope you enjoyed the video and you found the content useful. Please view the markets in a different way. If you look at YouTube, it is full of crap. Okay, you need to start thinking about the markets differently. Hope you enjoyed it. Take care of yourselves. Talk to you soon. Darren out.